Hello everybody, we're going to live stream today Planet 13 third quarter 2020 earnings call, and we are going to start in about 4 to 5 minutes. But while we're waiting, I just want to share my thoughts about this company. I discovered this amazing stock, in my opinion, in somewhere in middle June 2020, when it was still, if we're talking American dollars, USD, was I think $1.70. Yeah, that's the price. That's my entry price mainly, and then I just increased my position overall during last 3 months. So far, we just saw all-time high for this stock just today, actually, but we're going to this later. Just I'll put some background video, amazing video, by the way. This shows if you didn't have occasion to travel this last 6 months to Las Vegas, which I doubt you did with all that's happening today. Jay, what do you mean? Questions? Write me in the comments there. I will answer later because we still have 3 minutes. So yeah, just look inside if you didn't see it, and this is made by TechCrunch, but I will keep talking at the same time. So yeah, my thoughts on this: usually I invest in long term, let's say from middle long term, right? From 3 to 10 years, something like that. And with this company, it's still a penny stock, right? But it has a lot really good foundations. First, I start to invest when you look at the global trend, right? A global trend like electrical vehicles, right? Like in general, like renewable energy. That's something that keep on going, and regardless the errors company make during the next years, if the trend is fine, if you're still in the good market that is growing, that's when you can grow, especially if you don't have a lot of competitors here, and especially if you're number one in this area. So let's say, let's look at the Planet 13, right? Planet 13, it's in the, well, you know this M word, and by the way, word 13, which you will see in this video, that if you look at this, you just Google TechCrunch later, YouTube TechCrunch Planet 13, really amazing video. I like it very much. Thank you guys for making it. Yeah, right. So in this area, Planet 13 is number one, is vertically integrated, so it has all the, like Apple, it has like every layer under its control. They do not only own Superstore, which is basically like a Disneyland. If you look at this video right now, you'll see some insights from what's happening in the store, right? So they own the store, but they also own a line of products which are luxury, pretty luxury products. And they also produce it, and the largest producer, well, official largest producer in the world, they keep on growing and adding those manufacturing capacities, from growing from the plant until the end of the product. Yeah, we are about to start, so just stop talking here. Just want to say that we had a really good rally today for this stock, and I hope it will continue. But we can continue to chat about this in our Discord channel. I put the link in the live chat, but you can also find it in the description here. Alright, and don't forget to like and subscribe, of course, right? So you don't miss next videos. Okay, let me just come to Las Vegas and exercise every vice known to man, and then go home. I think there was a sound. Didn't start yet. It's already 5 p.m. right? Eastern time. Okay, let's wait a bit. And put me what your thoughts are. Will Planet 13 beat the expectations or not? My personal bet that, well, it will, like previously. Vancouver. Yeah, sounds familiar to me. I'm from Canada, by the way. Not originally, but... Okay. We're about to start any minute now. I think it's 1 minute past 5. I'm pretty sure they will beat it, right? I didn't see like for example with NEO, they published their earnings. Let me switch that music off. They published their third quarter earnings before the call itself. And by the way, if you didn't see that call, it was pretty interesting. Well, the questions, really, they say you can ask any question, but...
Financial results conference call.
Okay, starts.
As a reminder, this conference call is being recorded on November 24th, 2020. At this time, all participants are in a listen-only mode. Following the presentation, we will conduct a question and answer session. Instructions will be provided at that time for research analysts to queue up for questions. If anyone has any difficulty hearing the conference, please press star 0 at any time for operator assistance. I will now turn the call over to Mark Kindersma, Head of Investor Relations for Planet 13.
Thank you. Good afternoon, everyone, and thanks for joining us today. Planet13 Holdings' third quarter 2020 financial results were released today. The press release, financial statements, and MD&A are available on SEDAR, as well as our website, planet13holdings.com. Before I pass the call over to management, we would like to remind listeners that portions of today's discussion include forward-looking statements. There can be no assurances that such information will prove to be accurate or that management's expectations or estimates of future developments, circumstances, or results will materialize. As a result of these risks and uncertainties, the results or events predicted in these forward-looking statements may differ materially from actual results or events. Risk factors that could affect the results are detailed in the company's public filings that are made available on SEDAR. We encourage listeners to read those statements in conjunction with today's call. The forward-looking statements in this conference call are made as of the date of this call. Planet 13 disclaims any intention or obligation to update or revise such information, except as required by applicable law, and does not assume any liability for disclosure relating to any company mentioned herein. Planet 13's financial statements are presented in U.S. dollars, and the results discussed during this call are in U.S. dollars unless otherwise indicated. On the call today, we have Bob Groesbeck, Co-Chairman and Co-CEO, Larry Scheffler, Co-Chairman and Co-CEO, and Dennis Logan, CFO. I will now pass the call over to Larry Scheffler, Co-Chairman, Co-CEO of Planet13 Holdings, Inc.
Thanks, Mark. Good afternoon, everyone, and thank you for participating in our third quarter call. Q3 was our best quarter ever, and a demonstration of the resiliency, flexibility, and strength of our business model, Superstore, and Planet 13 as a whole. Despite the ongoing pandemic and Las Vegas being at less than 50% tourist occupancy compared to the same period a year ago, we generated $22.8 million in revenue, 36% higher than our highest quarter ever. Once again, we are responsible for 9% of the state's total sales, and this is continuing into Q4, with October posting another month for over $7.5 million in revenue. This improvement has been driven by operational changes we made throughout Q2 to adapt to COVID-19. We introduced delivery, which contributed $3.3 million in the quarter exclusively from local residents. We improved Superstore throughput, refined marketing towards locals and tourists, resulting in higher traffic and ticket and $18.5 million of revenue from the Superstore. We've also launched our brands in the rest of the state through our wholesale channel, adding an additional $1 million in revenue during the first full quarter of the wholesale sales. The Superstore's performance has given us the confidence to continue to build on what is working. On October 13th, we announced the addition of non-cannabis retail, continuing to build out the Superstore. The non-cannabis retail space will sell Planet 13 merchandise, and general sundries. In addition to the non-cannabis retail, we're also taking the opportunity to double the dispensary floor and add an additional 40 points of sale and another entertainment feature. We're consistently seeing lines out the door on weekends and wait times in excess of 30 minutes. Expanding the dispensary floor and adding points of sale will increase customer throughput, resulting in maximizing sales potential and a better customer experience. These are just a few of the many planned upcoming expansions at the Superstore. We still have 30,000 square feet of unbuilt space that is being held for a cannabis consumption lounge, a nightclub, and other retail opportunities. Our focus remains on creating one-stop shop convenience for tourists who are looking to enjoy their visit and giving customers more reasons to visit the Superstore and to stay longer. On the local front, we've recently opened our medicine dispensary. The medicine dispensary did $4.9 million in the last quarter it was open. Since then, we've seen strong Nevada market growth, and the Allegiant Stadium, where the Raiders play, they opened a couple of blocks away with potential tailgate locations surrounding our dispensary. Along with medicine, our delivery has remained strong and is an active part of how we're expanding our share of the local market. Overall, I'm very, very proud of the way the team responded to the challenges this year. Their hard work, innovation, and resilience has helped us return to our position in Nevada, with retail sales accounting again for over 9% of the state sales through Q3. With the medicine opening, we expect to continue to build on that dominance. With that, I'll pass it off to Dennis to discuss our financials.
Thanks, Larry. Before I begin, just like to remind everyone that the numbers on the call today are in U.S. dollars unless specifically stated otherwise. As Larry mentioned, Q3 was the best quarter in the company's history. Across the entire business, the company recorded $22.8 million in total revenue, $3.3 million from delivery and curbside, $18.5 million from the Superstore, and $1 million from the wholesale sales channel. The Superstore's performance, despite the limited tourist traffic on the Las Vegas Strip, has been tremendous. Delivery and wholesale are essentially new businesses for us, and the quick reception and rapid growth of those platforms has been fantastic. Gross margin during the quarter was 56.9%, returning to historical levels as we reopened the Superstore during the quarter to in-person sales. We've seen the cost of internal cultivation continue to trend down as we've increased yields and cultivation efficiencies. This momentum was somewhat impacted by the addition of a new cultivation facility during the quarter, but we are already seeing improvements in both yield and cost at the new facility in Q4 2020 and expect continued improvements as we fully implement all of our cultivation best practices across both locations. We are also seeing margin enhancement as more revenue is derived from the sale of in-house brands in the Superstore. This margin enhancement is partially offset from the lower margin revenue coming through the wholesale channel. Sales and marketing expense during the quarter was $900,000. This was up $200,000 from the prior quarter. Q2 was the low point due to the impact of COVID-19 lockdown, but still Q3 was still well below the historical levels of approximately $1.2 million in prior quarters. The company returned to a more balanced sales mix targeting both tourists and locals in the quarter. The company spent $6.2 million on G&A in the quarter, which was up from $5.5 million last quarter. This increase was a result of adding staff and investing in our organization to support the medicine dispensary, the wholesale fulfillment channel, and the planned opening of Santa Ana. As of September 30, 2020, the company had a cash balance of $56.7 million, an increase from $22.7 million as of June 30, 2020. The cash increase was a result of $3.8 million in positive cash flow from operations, $31 million in financing from closing of the two bought deals during the quarter, and this was offset by $4.1 million associated with the purchase of assets and other costs capitalized to the cannabis licenses acquired during the period. Since September 30, the company has closed an additional $28.8 million in Canadian dollar gross proceeds and saw the exercise of an additional I guess, the 400, we had more warrants exercised today, so the number's in the 420,000 range, and 100,000 options that brought in an additional 1.67 million in cash. So as of today, we have approximately US $71 million in cash, and this is after making a $7.2 million tax payment on October the 15th. And as a reminder, our current growth plans require about $8 million in capex for Santa Ana, $2 million for upgrades and additions at the superstore that Larry has mentioned, and another $500,000 on improvements at the recently acquired cultivation facility. The rest of the capital we have is earmarked for expansion initiatives. And with that, I'll pass the call back over to Bob.
Thank you, Dennis, and good afternoon, everyone. The Q3, as indicated, was a fantastic quarter for Planet 13. The superstore is performing well, our expansions are progressing, and our brands continue to gain popularity in the wholesale markets. As Larry mentioned, in the first full quarter of wholesale, we saw over $1 million in sales. Our HaHa gummies particularly have been a resounding success, taking multiple spots for the top edible SKUs in Nevada. Encouraged by this, we've expanded our SKU selections with HaHa beverages, which were introduced in October, and now our HaHa sour gummy line, which is being introduced to the superstore this week, actually, and is expected to be rolled out statewide shortly thereafter. We've expanded from 20 dispensaries carrying our products to over 40 dispensaries in the state now. More exciting than the new dispensaries carrying our products is the reorders we are seeing coming in from existing clients. It's clear our products are resonating with our customers. The performance by our team and the results from the wholesale sales really have reaffirmed our decision, or confirmed our decision rather, to invest and build our in-house production facility and our investment in additional high-quality indoor cultivation. As a reminder, we purchased additional cultivation in July of this year. We expect to finally close that transaction within days. We've ticked off all of the closing conditions and are simply waiting for Clark County to issue a business license. As part of the terms of the agreement, we immediately took over running the facility and are making a string of upgrades to reconfigure it to our needs and especially for our unique medicine strains. We are well on our way with those efforts and expect to see high yields from our incredibly popular strains in the near future, allowing us to expand our flower lines. Overall, in-house products were responsible for about 25% of our sales, which puts us well on our way to reaching the 50% target we've set. In California, our Santa Ana superstore is progressing nicely. We are finishing up with the permitting process and expect construction to start in early January, putting us on track for a projected opening in the first half of 2021. The California market has seen strong growth over the last couple of quarters as new regulations have helped to shift customers from the illicit market to legal channels. We're excited to see that change. And we're also excited to bring the Planet 13 experience to California and introduce new cannabis connoisseurs to a unique cannabis shopping experience. I think we've also benefited from the crash course we received in cannabis delivery over the last 2 quarters here in Las Vegas. And we think those experiences will bode well as we transition into California. This has been an incredibly productive year for Planet 13, as I'd mentioned. We withstood the greatest possible macro headwinds, significantly de-risking our business model. We've diversified our Nevada operations by growing local sales with curbside pickup, delivery, and now medicine reopening. We're building a name for our brands and driving growth through wholesale. We are well on our way to our first out-of-state expansion and are armed with a substantial war chest to go about and pursue those additional opportunities. With that said, I'd again like to thank everybody for participating, and I'd now ask the operator to end the call and open the lines for questions. Thank you.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Thank you. Our first question comes from Doug Cooper with Beacon Securities. Please proceed with your question.
Hi, good afternoon, guys. This is a great quarter. Let me start out with the margins, Dennis. EBITDA margin 27.2% versus 20.2% last year, so 700 basis point improvement. Can you sort of indicate how much of that was due to just increased volume and operating leverage, and how much maybe was due to the vertical integration in your own products?
Doug, we've bifurcated it a number of ways, I guess, to get as granular as we can. As we move towards our target 50% of vertical integration, we're about halfway there now, so I would say a good chunk of that margin improvement, probably a little bit over half of it, has come from that vertical integration. And then the balance of it is coming from, just the success of the store and the larger ticket sizes and, the return to that tourist customer where we get higher margin business. So our curbside, I guess it's a testament to the fact that we have curbside and home delivery that are targeted to locals, and so those margins are lower, but that lower margin is offset by the higher percentage of in-house products that we're selling through those channels as well. So it's kind of a double whammy on that one. So.
Right. So what do you think, if you get to your in-house products get to 50%, including, I guess, most particularly your own flower, or more of your own flower with the new cultivation facility coming on, and then obviously more scale, what do you think EBITDA margin can get to?
Without having to, continually update that, I mean, we've talked about in the mid to high 30s as where we think it realistically can get to without a lot of additional costs that we have to spend or CapEx we have to spend. So that's our target.
Okay. I noticed that flower represented 61% of sales in the quarter versus, pre-COVID it was in the low 40s. Is that still a reflection of the local? Would it be a reflection of the more of the local traffic in your mix, maybe than historical?
Yeah, that's part of that, because on the curbside and the home delivery, that is the case where the preference from the local customer is more skewed towards that flower market, as you know. But as the tourists come back, they tend to buy the higher margin non-flower products that we sell in terms of our in-house brands. So the margins there are pretty lucrative for us. So, but that mix on the flower side is driven by that local customer for sure.
Right, and so part of that to get to the mid to high 30s, could it even, I guess with more edibles or concentrates, it could help to get there as well. Medicine, so you've reopened. 4.9 million, I think, was the last quarter. Larry said in his speech. Given, I know Nevada's grown, but there's been a number of new stores open as well. Albeit one of your competitors is about a mile away, did very well in the quarter as well. Can you speak to what your expectations are? Can you match where you were, or do you expect to be more pressured in terms of the competition? And cycling off, obviously, some to the superstore in the past.
Yeah, so I'm going to turn that one over to Bob for that, Doug.
Yeah, I'm happy to address that, Doug. Thanks. Yeah, there's going to be a bit of a ramp up. We expected that. I mean, the store's been closed for 2 years now, basically. The timing on the opening, was a bit longer than we'd anticipated with the regulators. But now we're open. The store is literally continuing to be stocked as we were on this call. So the full rollout and the launch with the advertising and messaging on the reopening really starts in earnest later this week, Friday to be exact. But we're very excited about, what the future holds. Since we reopened, we've got a $2 billion stadium down the street from us. And we've got significant improvements to the 215 freeway system that have just finished. So it's easier than ever to get in to our store. So a lot of upside there. I'm confident that, again, with a brief ramp-up period, we'll get back to the numbers that we were looking at when we closed in October of 2018.
Right. Now let me just add, this is Larry, that that competitor you're talking about was not a competitor when we were open. They became more successful at that location because we had to move our license. When we're back, we'll take over control of that area just like we did before, and it'll be just as successful as before. Unfortunately, to their detriment, but even though they're good people, it's our location is far superior.
Your corner boys are going to be back. Finally, just on your wholesales in 40 other dispensaries. I think that's about 2/3 of the state's dispensaries. Can you get more? Or is this the 40 best ones, and is now just a question of improving same-store sales at those dispensaries? And how big do you think the wholesale business can be? And I'll leave it there.
Well, I think, again, Doug, it's Bob. I certainly think there's room for additional growth. And as you know, we've got quite a few new recreational licenses will be coming into the market here over the next 12 to 18 months. So there's a lot of upside there. There's no reason we can't be, in 2/3 of those stores as we continue to grow. We're excited about that. Our team tells us they're getting very positive feedback from the stores that we're not in, and that they're interested in looking at our product lines. So they're going to keep pushing, and really the proof is in sales, and they see what's happening with other stores that are carrying our product lines, and they're looking at the sell-through rates. So a good business person is going to take advantage of that as well. So there's plenty of room for growth.
Great. Thanks very much, guys.
Thank you, Doug.
Thank you. Our next question comes from Bobby Burleson with Canaccord. Please proceed with your question.
Hey, guys. Thanks for taking my questions. So, just thinking about margins again, but maybe honing in a little bit more on wholesale, kind of curious, where you see those margins going with the additional cultivation coming online.
Yeah, so Bobby, it's Dennis. So the additional cultivation coming online, when we first took it over, we were utilizing some of the flower that was in the facility and the inventory that we acquired as part of that asset acquisition. We pushed that through our own production facility, and so got some great margin enhancements there on our in-house products, using it for the HaHa gummies, and et cetera. Going forward, as we move our own strains into that facility, there'll be less opportunity to use the flower. Well, I guess I could spin it the other way. All of the flower that we can grow in that facility will be sold as premium flower in the store, and both at the superstore and the medicine store. And so it's a higher margin game for us selling that flower. We were 8% of revenue coming from our own flower in the second quarter. We should see that kind of more than double to 16 to 20% with the addition of this new cultivation capacity, and it'll be in that premium flower category. So I think the margins will be a lot better than what we were getting just running it through and making our own edibles and concentrate products.
Okay, that's helpful. So it sounds like the margin opportunity is really in the superstore, obviously, as you move that premium flower in and get more of your own shelf space with house products. For both. Well, I guess for both that and the medicine store, because that will add. And medicine, okay. I think we'll sell the majority of our products. I think medicine will be majority of our products in that store, and not as many third party, because it is more of a local market, right? So. Perfect. And then just curious, with expansion initiatives beyond Santa Ana for similar, large format, exceptional experience stores, what kind of costs are you seeing out there
if you had to compare, other metros you're looking at to the kind of costs you've incurred and you expect to incur, both in Las Vegas and Santa Ana for building out, large format stores. Are there big kind of ranges that you're looking at in terms of, the cost of land or labor or, other inputs?
Yeah, I think the big cost swing, it is a broad range, as you mentioned. I mean, the big issue for us is it an existing operator with an existing storefront that we're buying and then going to move, or do we get a license through another means or a license from a party that hasn't opened yet? So it's quite a broad spectrum where we're looking at leased land or leased assets mostly. So we're not going to buy land or buy a building, but we lease the building. So we're partnered with a couple of national real estate groups that have primary locations in the markets we want to be in, and it's just a question of how we go about getting licenses in those individual markets and moving them into the locations that we want. So it's going to be a bit of a mix depending on the state and the city we end up in, or the cities we end up in.
Great. So if we start thinking about the growth on top of the kind of 2021 expectations, obviously we would get a full year of Santa Ana in 2022, but as we start to layer additional stores, potentially onto your forecast, how much dry powder really is that $70 million and kind of the cash generation between now and when you might start building things out? Is that, are you using a mix of cash and stock? It seems like a significantly large amount of dry powder relative to kind of the revenue footprint you guys should have organically, I guess, in 2021.
Yeah, I mean, we intend to use cash and stock to get into the markets we want to be in. If we look at Santa Ana as an example of the mix of cash and stock, if we can replicate that deal, then the $70 million in dry powder gets us a significant number of stores. I don't think that we'll get I don't think we'll be able to find as good of a deal that we did in Santa Ana going forward, depending on the markets, because there are lots of competition in some of the markets we're looking at. But suffice it to say, I think we can at least open 4 more stores with the $70 million thereabouts.
And that's sort of. Thank you. That's helpful. And is there a lot of emphasis now, being placed on trying to get access to more cultivation assets internally in California going forward? What's your thought on how important that might be over the medium term?
And that's going to depend on the market we're in. Now, if you look at, as the various states have very different supply-demand dynamics in them. A lot of them right now are cultivation constrained. Does that stay the case 18 months from now as a lot of these cultivation facilities come online in the various markets? So it's going to depend. Obviously, if we can be vertically integrated in the markets we go into, we'll go into markets retail first. Definitely have production facilities, extraction facilities, built out. And then in the markets where we think that we need to have that security of supply, then we'll definitely look at the cultivation. So some of the opportunities we're looking at are fully integrated. Others are, let's get in retail only in this state and see where it goes based on what we think the supply-demand dynamics are in those markets.
Great. Thank you.
Thank you. Our next question comes from Greg Gibas with Northland Securities. Please proceed with your question.
Hey guys, thanks for taking the questions and congrats on the strong results this quarter and into October as well.
Hey Greg.
Regarding the current plans that are underway to double the sales floor to increase the customer throughput during those peak times, like you were saying, how much, I guess, of an uplift in daily transactions would you expect to see there, maybe if kind of all else is equal? And, maybe it would help if you could elaborate maybe on the degree to which you see potential customers maybe being discouraged from visiting or shopping during those peak hours?
Well, this is Larry. Let me answer that. Again, we probably can max out here after COVID. Pre-COVID, during COVID, it's going to max out probably $400,000 only because we're at 50% capacity. But on a weekend when we're busy, we probably can't hit past 450, 475 a day when we're busy, only because we can't get that many people through without having the long lines and the wait times where I hate lines and people just get disgruntled and want to leave. I think with the adding 40 more points of sale, adding another entrance in, another check-in in, which we're doing all of those, we then I think should max out somewhere between $800,000 and $900,000 a day on our busiest days, the Fridays and Saturdays, once we get all the tourists back and everything going on. We know we have to do it, or we will be hitting the wall. We were just expanding so much, even with COVID, we're still expanding. Can you imagine when this COVID is over? And again, we're just hitting less than 3% right now of the tourists that were coming to town pre-COVID. Less than 3% come here. If we even just double to 6 when COVID's over, we will definitely need the double the dispensary. I can even see in the future that if we continue to grow that way we were going, and people keep advertising themselves on how well they love the experience here and the shopping experience and the whole situation, the entertainment complex, I could literally almost see us taking half of the site and maxing out probably with the grand hallway at almost 60,000 square feet. That's, again, long-term dreams. I'm always optimistic, though, about it. And but we'll start with our first expansion, see how it goes, and I think you'll see us enlarging again here shortly.
Got it. Yeah, that's extremely helpful, Larry. Appreciate that. And I guess part of that kind of relates to my next question, just being, I sorry if I missed this, but I think you said it was the estimate of kind of the breakdown of tourists versus local this quarter. I guess just kind of rough estimates there, and then also kind of wondering, I know the medicine store heavily skewed towards locals. Just kind of wondering what transaction sizes compare with the superstore versus medicine, and maybe what the exact breakdown is in terms of the customer split in terms of locals and tourists. Just trying to get a better sense of what that potential uptick in traffic would look like once travel resumes.
Well, hey Greg, it's Bob. Let me jump on this, and then Dennis can fill in the details if necessary. But pre-COVID, we were probably doing about 85% of our customers were non-Nevadans. So, since the latter part of March when we closed, we've really seen that reverse. So I would say, roughly 85% of our customers are now locals. And even more so in the last couple months here, this quarter, and now with the governor's recently announced pause, a lot of the major casinos on the Strip now are open 4 days a week. And now we've got additional lockdowns with clubs. The fourth quarter's historically been slow in the town, but it's been historically slow now with COVID and, with that transition. But I believe, as does Larry, once this lifts, and we're excited, we think, by the second quarter of next year, things are going to open up considerably. We're going to see that rush. There's a huge pent-up demand. And we know, and we're very confident with that expansion, we'll be able to service our customers and all of our customers. So with medicine, it's a little different. We just reopened it a couple nights ago with a soft opening. It's going to be a little different to give us a little bit of time on that. But if you look historically at what the average basket size was there, considerably lower than what you would have at the superstore. So I put it in the $75 range probably from a historical perspective. I'm not quite sure where it's going to come out now, but again, the location is fabulous, the facility is fabulous, and the product lines that we carry are outstanding. So, we have every reason to believe that storage is going to be very successful again. Great. That's helpful, Bob. Last one from me was just kind of relating to the go-forward cost structure. If we think about maybe the superstore being pretty well represented in Q3 minus the, I guess, upgrades that you're currently making, how should we think about what the addition to operating expenses that'll come out of Medizin will look like, which are opening this month? I mean, what should kind of the run rate be there? But Dennis, you want to take a stab at that?
Yeah. So So, Greg, can you repeat that for me? I was looking at the average ticket when you started telling it.
Oh yeah, no problem, Dennis. I was just kind of wondering what the cost structure will look like once we add in the medicine store on a go-forward basis here. You know, in terms of the OPEX that will add to where we're at right now with just the superstore.
Yeah, so I guess from a third quarter perspective, you know, we added a lot of people, and obviously during Q2 we didn't downsize as part of COVID. So I don't think, you know, our OPEX is going to be that much higher than it was in Q3 with the addition of the medicine store. We've been paying the lease the whole time. We've been paying, you know, the fixed costs in that place. The OPEX, we're going to move people, and we have started scheduling shifts of bud tenders, et cetera, over to that location. But the overall OPEX, I don't think you're not going to see a big increase over Q3 to get that store up and running and you know, flowing through. Obviously, we can stock it from the products we have in-house as well as, you know, third party. So, you know, I don't think the operating costs are going to be that much higher to run that store than what we're seeing now. In fact, I think, you know, if you look at the you know, the margins in that store will probably they'll definitely be better than they were back in when it closed, because we're seeing the average ticket sizes from the local customers at both the superstore and through the home delivery, you know, significantly higher than they were at the medicine store previously. And so with the different events that we think will happen in the Allegiant Stadium and in and around that neighborhood, I think we can see some big numbers on certain weekends coming out of that store too with really good margins.
Okay, great. Good to hear. Thanks, guys. I'll pass it on.
Thanks, Greg.
Thank you. Our next question comes from Scott Fortune with Roth Capital Partners. Please proceed with your question.
Good afternoon, and thanks for taking the questions. Real quick, can you provide a little more in-store metrics when compared to pre-COVID as far as what's really driving the growth as far as volume and transactions, or versus the average ticket size going much higher? Can just comparison from the pre-COVID levels to where you're at now?
Yeah, so Scott, it's Dennis. So before we shut in March for COVID, we were looking at, you know, in that $100 to $105 average ticket, and we're averaging kind of 60,000-ish customers a month. And then post-COVID, we've seen that ticket go to 125 for in-store. Customers falling down into the, you know, the mid to high 50s. So, you know, definitely the volume is not there in terms of the customer throughput that it was pre-COVID. Part of that is because of, as Larry talked about earlier, we just can't get the throughput with the 50% operating capacity that we have to abide by under the COVID protocol. So if we can double the size of those registers, I think we can get back up to that 60,000 type of customer traffic, and then the $125 average basket in the superstore, I think, is pretty solid. Our delivery and curbside model, which is local customers, you're seeing that average ticket size in the $100 range. So still significantly above the $69.70 that we were experiencing in October 2018 when we shut the medicine store. So I think the ticket at the medicine store will be somewhere between $70 and $100 on average. That's a broad range.
Right.
But that's sort of where we're going from.
I appreciate that color. And just real quick on your cultivation expansion as far as capacity in serving the Nevada market, if we have new dispensaries coming on board, kind of how much capacity you have for your own superstore and medicine versus the wholesale side, and is that enough capacity as you look out from the wholesale, looking out 2 or 3 years from now?
So the current facility, as it stands, we can double it. So it adds about 15,000 square feet of canopy at that new facility in the 25,000 square foot building, and it's a 40,000 total square foot building. So we can get another 15,000 square feet of premium indoor grow out of that new facility. With the two facilities operating, I think, at least for the next 18 to 24 months, we'll see our ability to satisfy our internal sales of that premium flower in the superstore is where all that flower is going to go. So I don't see us really wholesaling any flower to third parties. What we do right now, given that our current, prior to the acquisition of this new facility, we had 15,000 square feet to grow. All of that flower was sold as premium flower in the superstore, and we purchased third-party, kind of B and C grade flower and trim on the market and push it through our production facility to make our own in-house brands in terms of the edibles and concentrates. So I think that's going to continue. We still get decent margins out of those product lines because obviously we're making them ourselves. We have our own brands and we get the margin pickup there.
Oh, great. And then last real quick question, with the momentum of new states coming on board here, what's the biggest kind of drawback or hold up for moving forward in new states and finding those licenses there? What can accelerate that, or what's the hold up currently right now?
Yeah, I mean, as we discussed before, I think I'll let Bob and Larry, add on, but I think it's our ability to find the license in the location that we want to be in. We're having challenges in certain markets we can get a license, but can we move it from, store A to the location we want it to be in? That's where the challenge is right now. So it's a local political challenge that I think, at least based on what I've seen. But Bob and Larry, I'll let you expand on that.
Well, this is Larry Scheffler. I'll add a little bit to that. We want to do what we've done in the past and why we think we've been successful. We spend this money like it's our money, even though it's public money. So if it's not a good deal, as when we were both entrepreneurs, Bob and I, if it's not a good deal for us, it's not a good deal for the corporation. We want a good deal. We don't just want a deal. And we're going to continue to do what we've done the best and wait for the right opportunity. Just because we have money in the bank doesn't mean we're going to go out and spend it just to spend it. We think that's the wrong way to do it. We haven't done it in the past, and because of that we think we've been successful. We've been successful. We'll continue to look for these deals. We'll find them. It takes a little bit longer, but this way doesn't put us into the category of 4 or 5 other groups that have been out there that are all liquidating now, doing exactly what we don't want to do. So we just keep searching like we did in California and like we did here for the grow. It's been successful for us and for our investors. We're going to continue down that path.
I appreciate it. Thanks, and congrats again.
Thanks, Scott.
There are no further questions at this time. I would like to turn the floor back over to management for any closing remarks.
I don't have any further remarks. So Bob, to you, this is Larry.
No, fine, thank you. And again, thank you everyone for participating. We can end the call.
I have some remarks, so just wait.
This concludes today's call. You may disconnect your lines at this time. Thank you for your participation. Have a great evening.
All right, so yeah, let me put myself on the screen so you can see me. Hello, here I am. And if you hear some weird sounds around where my children just came back, so don't be surprised. All right, yeah, so a few remarks about this. First, thank you very much for all your comments there. Don't forget to continue to talk all together in Discord channel. I put it in the pinned message. But let's take a look at this press release, right, that you see here on the screen. The one that I personally like. First, the cash. Look at this cash. It used to be a year ago, not a year ago, December 31st, 2019, 12 million, okay? And now it is 56 million, almost 57. Incredible. We see that total assets are doubled and liabilities almost doubled as well, but we still see that assets, I don't see the full detail to see what is the current ratio, but it really looks very interesting. Look at this, 125 compared to liabilities of 40. Okay, that's big enough. And also in the quick numbers here, we see revenue were 22 millions as compared to 16 millions, which is 36% growth. Okay, and that's great. I encourage you to go to their website and see. But okay, just for those who do not understand the business of Planet13, again, Planet13 is not just a superstore, right? Planet13 is a superstore and a production company, owns its own production facilities and builds its own brand products. Those can be easily separate businesses, right? Here we have all integrated, and still Planet13 has been number one in this in the world so far. And with recent news that Mexico is about to legalize, you know what, and 4 new states in the United States, which are for the reference. Let me find them real quick. I always forget. I just pasted them in the chat. Right, so Montana, Arizona, New Jersey, and South Dakota. So those 4 states just are about to join other states. I think there will be, there used to be 7 and now 4 more. So it makes it around 11 in total, and we still have a lot of room to grow. Even though, if you didn't hear, they said during the call that they only right now in the main and the only one superstore in Nevada, Las Vegas, at around 3% of they're reaching 3% of all the people who is coming, of all the tourists, and they can easily go to 6% after the, you know, everything related to Ronnie Rona ends. So, and the second thing is that they are opening pretty soon the second store in California. So again, a lot of growth, a lot of potential growth. If you look at the other just superstore chains without their really own brands, you will see that the market capitalization around $10 billion and more. And today, Planet13 is only $600 million. If we just, you know, base in comparison off of those, which means that we are about 15x growth in the next 5 to 10 years, right? And if we are adding just the potential value of internationally, internationally, sorry, I have my language. So, international expansion is really possible. Mexico is about to legalize it. Canada is already open to those. And, well, United States is becoming more and more attractive. So again, big trend. The company, which is number 1 today, you just heard the management. Awesome. I really like those guys. I really like hear them talking, and they're not just wasting money. That's what I like. And they have created a really nice experience at Disneyland. Basically, this is just a place when even if you are not, if you never try it, you just want to go there and see what it looks like, because it's just an unusual experience. And what people are spending money for, well, you know, travel. But what a travel is experience. That's why Disneyland parks and Universal parks are so popular, right? Well, there is a certain way of, you know, of creating another alternative park. Let me just real quick take a look at the comments. If I'm correct, they turn profit. I didn't see those. No. Okay. Anyway, please like. And again, this video, it really helps me. It really helps the channel grow and be, you know, spreading around. If you like how things happens here, and I really love to hear from you, really. It's not about me making videos or making live streams. It's about, you know, having this conversation, having access to knowledge from different sources, from video, from chat, from, you know. So we have this whole knowledge sharing. And well, the ultimate goal for me personally is, of course, to be financially free. And I think this should be happening in around 5 to 7 years if everything goes as planned. So stay tuned, stay here. And by the way, there was a question about what if company it's still traded on OTC in the United States. What needs to be done to go public on the big exchange like New York Stock Exchange or, well, NASDAQ? Well, the fast track of this year is SPAC, S-P-A-C, right? If you don't know what that is, well, you should check it out. There is a lot of SPACs happening this year. I think so far we have around 200 compared to last year. It was around 10 or 15, something like that. And previously it was almost none. And a lot of SPACs happening in electric vehicles area, but not reserved to it. So anyway, thank you again for being here, and I hope you like this. See you soon. Bye.